Big moves in some of the top weighted stocks for the week: Nvidia, Tesla, Palantir, Broadcom, Amazon, all down between anywhere from 2 to 8%, as you can see there in that graphic. So what's behind the move, and have we fallen too far too fast? Let's bring in Frank Cavallari, founder and CEO over at Cap Thesis. He's also a CNBC Pro contributor. Also with us is Sarah Kuntz, the managing director at Clio Capital. We're going to have a kind of more roundtable conversation about this because we'll have varying viewpoints as to how this tech AI trade is playing out. But Frank, we're going to start with you. As we take a look at that NASDAQ large cap 100 trade, we've seen it now decline below some key moving averages that some traders watch. What exactly do the charts tell you about just how significant the pullback has been in context?
Don, thanks a lot for having me. Well, it's really not about what the NDX does after it gets down there. It's about the rebound efforts. Because as we can tell, going all the way back to October 2022, NDX is up a lot. But how many times has it undercut this line, right? Every time we've seen a bounce back, sometimes taking longer than others. So what we want to see here is not only a rebound, but prevent this from turning into a bearish pattern breakdown. And that's one thing that's been missing from this entire thing. Looking at the S&P 500, NDX, whatever it is, we've seen bearish patterns form, meaning consolidation phases take place, but we've seen bid come in every time, preventing these from happening.
So we're not seeing even that pullback even play out right now to the degree that it has in the past over the course of the last few years?
Not yet, but that obviously is a concern, especially after a move that we've seen since the April lows.
All right, so Sarah, with your part in this whole discussion, let's talk about from a market's perspective in your mind. Have you seen damage enough, or is that damage still to come based upon these valuation concerns? This pullback has been driven by AI to the downside.
Absolutely. Look, I don't have a fancy chart like Frank, but I can tell you that, when you look at Palantir, you look at Tesla, yes, they're dipping right now. But when you look at what that PE ratio is in the triple digits, where they're, 10 to 20x what a lot of their competitors are, that's a tough sell, even if they've had a few percentage points shaved off.
Now, that trade as well, though, is something where those valuation concerns have played out more markedly, very near term over the last week, but have been at play for maybe about a few weeks now at this point with some large cap names. What are the ones that you think are the most susceptible to any more further downside based upon those valuation concerns?
I do think it's the Palantirs and Teslas specifically of the world, where no matter how you feel about, the management team, the core product, their future sales sort of prospects, they're just incredibly highly priced for where their revenue's at. I would put CoreWeave in that bucket. I think that's another one where we've seen some damage this week. These are tough sells if you're concerned about the fundamentals, which until the last couple of weeks, I've sort of been alone in that.
Okay. Let's bring Frank back to the discussion here. Sarah highlights Tesla. Let's talk about the Tesla chart in your mind here and what it's done so far and what you think it could be doing.
As you can tell, this looks like a classic double top right here, right? And it's currently down below that. And we just talked about for the NDX, it's much more clear in Tesla. So now we can tell this is not really a straight line, but this is around the 350 level. This is what we call an air pocket. So if we don't have a demand come in once more, momentum can continue to the downside until it gets to at least that area.
So that 350 level is one to watch here. The other name, if you could mind clearing that I want to bring up here in the discussion is Nvidia, because it has become, rightfully so or wrongfully so, the poster child, if you will, for just what's happening in the market overall, certainly within the AI trade. What does the chart tell you about the Nvidia situation as it's developing right now? Because it doesn't seem to be pulling back nearly as much as it could be given this downdraft.
That's true. I think a lot of the reason for that, of course, is the reporting very soon. And so I never make a trade recommendation based on what the report says, but it's very important to understand the structure of Nvidia. And this is the 200-day moving average here. As we can tell, it's above it right now. That's at about $150 a share. But there are times in the past where it's reclaimed the line very well and then led to years of upside action. So the concern is that that doesn't happen. So we just reclaimed it again now after a few months. And we see that 200-day moving average eventually undercut once more after only spending a few months above it. That could tell us that maybe momentum is finally slowing in Nvidia. Obviously, that would have a huge effect on the market in general.
Now, Sarah, the Nvidia story is big for you as well. Just how much can you read into Nvidia driving the broader market sentiment? We already know mathematically it is the biggest influence on key sectors in the market.
I like Jensen. I think that Nvidia, is a company that has a long history and a long future. But at the same time, the reality is that some of those competitors are catching up. We see from names like Taiwan Semiconductor that the demand is going down. We know that the enterprise AI adoption is largely not quite there yet, and so there are some serious questions about who's actually going to buy these chips and at what scale. The China question is very much still out there. And so I like NVIDIA. I think it's a little bit expensive right now. And I don't think it's something you sell, but I also think you have to think about what the next kind of year looks like for it, which might not be its best year in recent years.